Okay, I think I'm recording. Yes, I am. Okay, everybody, hello, welcome. It's Andy here. It's Friday evening. The sun is setting, or the rain is setting, which if you can see the sun at all, wherever you are. Yeah, London it's 16:40, so London is more or less closed now, and it's time again to do a video. And I will first begin the video with the worst intro that could be possibly performed on a YouTube video. But however, okay, I'm going to go through the markets and I'm going to give a bit of a roundup of the week. Um, we could say that it's probably been an interesting shift, but we'll get into that. I want to get into it in tonight's update actually, but the data that's coming out of the States right now is just horrendous. The trade data and the consumer debt data. Everything is pointing. I'm I'm listening to reports and I'm reading reports, and it keeps saying something akin to these levels have not been seen since summer 2008 or early 2008, and they just fail to go one step further and take that to the logical conclusion that maybe we're approaching a point like summer 2008 again. But no, we can't make that leap in our heads. That's beyond the pale. That cannot be, like, do not speak of it. It's like what's that fellow's name in Harry Potter that you can't mention his name. You cannot mention recession, or you cannot mention market crash. Okay, let's get down to it. This is euro dollar. I'm going to start with the dollar crosses, and then we'll get into stocks and the rest of it. Hoo-ha later. Okay, this is euro dollar, and I still have this, yeah, possible alternate account still there. It could be another extended wave 2, although I doubt it now at this stage. But on a grander scale, it is possible that we have a wave 1 and 2 in brackets, a wave 1 and 2 in blue there, wave 1 and 2 in green brackets, wave 1 and 2 in brown, and now a possible 1, 2 again. So that could be 5 degrees. That could be horrendous for euro dollar if that turns out. We're now down below the November 18 lows again. So we broke, well, we're back above that. It's using it as support, but we broke it pretty conclusively yesterday. And that is a decent indication that we could be moving into a third of a third scenario soon in euro dollar. This second wave high has got a hold. As I think we've got another 1-2, if you want to believe that or not, underway. That 114.19 area, 114 level, has got a hold for wave 3 down to be valid. Okay, so let's get into the half-hour chart there. Sorry, hourly chart to see what's going on. All right, so I think we can chart 5 waves down, a little small fourth wave, and then a plunge down into a fifth wave. We're expecting a little bit of a bounce today. We got the bounce. I think that's wave A, and it should be, all going well, it should be a corrective through wave move to complete again 1, 2, and then we'd move down into third wave. The other way you could look at this is that this is in fact 1, 2 complete of wave 3, and now we're moving into a third wave of a third wave. That should become apparent early next week. So we want to see this again, a possible second wave play out, and then a further break of support. So we want to get rid of that first. I want to see that wave 2 high 114.19 hold as wave 2 completes. I think the upper end would be the previous fourth wave there at about 113.20 or so. Okay, that's euro dollar. Pound dollar, yeah, get over here. We've moved down fairly reasonably off the high. It's a little bit convoluted in there, unless it's a series of impulse waves, which is Could be. But I like the fact that we've completed a three-wave pattern and we've moved down, back below the previous swing high, and we're heading towards that previous swing low. So if we get a break of that previous, that's a B wave in there. This swing low here, I think that'll pretty much confirm that larger degree wave one. And yeah, we'll be pointing a long way down for the moment in a larger degree wave three. Yeah, so let's get down into this move off the high here. As you can see, it's filled the trend channel, and now obviously we're working on a wave one down in, so it'll be wave one of one. Okay, so here we go. This will be wave one of one, and what we're doing at the moment is a series of moves, impulse patterns. So that was 1, 2, 1, 2, and now we're on 3. We could be working on wave 4 right now. You can see the last hourly bar didn't break below the previous one, so we could be kind of correcting slightly now. It's hard to know if that's wave 4 of 3 or wave 4 of internal wave 3 here. Suffice to say, I think this third wave should continue lower. This internal second wave here at 131.85 has got to hold now, and this is kind of that attractive level, that 129.66 level of the previous wave B, and then the lower wave B that I was looking at in the 4-hour chart, that's 127.72. So we have a kind of minor degree support here, 129.66. Break of that will probably confirm that wave 3 down, and a break of 127.72 or 127.70 will confirm this larger one down. So next week we still want to kind of build this 5-wave pattern back in the direction of the downtrend. So that's what I'll be watching early next week. We've got this wave 3, 4, and 5 to complete, so we're a little bit away yet. Okay, so dollar yen. Why are my charts all over this? Because they always are. Okay, so we've got a series of 1-2s and again a lower degree 1-2 in here. Off that, is that the 4-hour chart? Yes. Off that triangle low. I still think we're working on beginning a third wave up, just like we're working on beginning a third wave down. In Eurodollar and cable, I think we're working on the beginning of third wave up in dollar yen here. So let's get into the hourly chart. You can see those series 1, 2, 1, 2, 5 waves up again in wave 1, expanded flat wave 2, or sorry, running flat wave 2, and then 5 waves up again in wave 1, and now I'm looking at a correction in wave 2. We had an extension lower today. I was looking for support to be hit at 111.20. We broke through support. Now we're coming back towards it again, and I can see a small 5-wave pattern here. So if you can pick that out, with 1, 2, 3, 4, 5. So that's probably wave C complete. So it was most likely some sort of A wave, B wave, and then 5 waves in C. So probably classifies as a flat. Yeah, I can see a minor 3-wave move up here. So the A wave down may even have been a leading diagonal. So this could, yeah, it doesn't matter what it classifies as long as support holds here at 110.35, and we've got a second wave and we push higher into a third of a third. So that'll be confirmed with a break of 112.13 next week. So again, a break at that level I think will confirm a large degree third wave up, and we should move significantly higher. If we go out to the 4th wave, the way that these subdivisions are happening, it would suggest that the acceleration will be extended. So we should break the wave D high. That would be 114.72. Long term, I want to break that 120 level again. and that goes all the way back to around the 2016 highs. But one step at a time, we're looking at a third of a third up, moving in possibly next week, as long as this support level holds. Okay, that is dollar yen. Let's get to stocks. I'm kind of toying with the idea that, first of all, a B wave. That's the highs that are in place, possibly in place right now, is viewed as a B wave with a C wave target at about 21,000. So that gives us three possible three waves there, and then a 5-wave move down in wave C. We could also be calling this a failed 5th wave. So that would be first of all, the current, let's say, operating wave count views this as wave 4, and with the possibility that a further 5th wave might come in. If you were to view this 3 waves down as wave 4 complete, and maybe a failed 5th wave here, then you would be moving down into a more significant decline, long-term decline. You could also, if I'm just going to throw a cat amongst some pigeons here for a second, you could view it as a 1, 2 with like an extreme expanded flat, wave 2. So 5 waves down into, I think that was the late October or November lows. An A wave, a B wave, and a C wave. So that'll be a kind of, it wouldn't be an expanding flat because we didn't break the previous high, did we? So it'll be a running flat, pitch between those two. It could be an extreme running flat or expanded flat wave 2. And in that case, then we're moving down into a 3rd wave instead of a wave 1. All in all, the minimum target would be about 21,000. It would most likely overshoot, maybe back down to the 19.5s. We have kind of a big shelf of support here back in, when was that? 2017, around those 19.5 to 20,000 level. So for now, going forward, I think if this is a 4th wave, or sorry, if this is a 1st wave down, then we're looking to build a 5-wave move with a minimum target of about 21,000. Okay, let's get into the hourly chart to see what's been happening here. We could kind of shift around the degrees of the labeling here, but I think we could be moving in, or I think we could be complete in a 3rd wave of wave 1. So we could also move this up, this labeling up by 1 degree. It won't change anything, but will give us something large to work with, a 3rd wave down. But a possibility that we have 5 waves on the go off the high. So we have this little internal wave 1 here off the high at about 25,850. So you don't want to see any move back to say this previous shelf here of our shoulder about 25,800 again. That should not be breached. For now, we could still be working on this 3rd wave down. It's very hard to say. We haven't had any significant correction at all in 4th wave, so these minor little retracements could be just filling out 3 and 4s of this 3rd wave. So next week we want to complete that larger 5-wave move, and maybe even the kind of right shoulder retracement here in wave 2. It would be it'd be fantastic if the market kept falling and broke support completely, which in that case we could pretty much rule out. or we could pretty much confirm that the turn is in that previous fourth wave at about 24,000. So we're a bit away from that right now. Kind of tentatively just counting this 5-wave move as it goes, and that will continue to be the course early next week, with the view to building a larger impulse wave off that, and that should give us some nice levels to work with into a third wave down. Okay, let's kind of move on. Let's move on to gold again. With a nice spike today. Actually, I was expecting the lower level 1276 to be hit, and that was the previous fourth wave here. We've moved higher again today, so it doesn't look like we're going to hit previous fourth wave. But for now, we're looking positive in a possible wave 5 of 3. I was saying during the week that I do not want that 1243 level to go in any correction, because that's the previous wave 1 high, and if that goes, well, then we'll have to shift completely in what I think is happening here. But for now, I think we have a C wave of wave 4 possibly complete. I mean, this fourth wave could build out further, and we could consolidate for another while and build a triangle. It's impossible to know right now, but for now, we're moving higher. This could be wave 1 of 5, so that's what we'll work with at the moment. Okay, wave. This is the hourly chart. You can see that support there, 1276 was the target. We could have completed a very kind of tight triangle here in a fourth wave. And this is the C wave down here, so 1, 2, 3, maybe a nice tight triangle in wave 4, and one little minor spike in wave 5. We didn't reach that support, but all the better. We're moving up in 5 waves, so this is either wave 1 of 1 or it's wave 1 of 5. So with that previous support there, so we'll move that and delete that. This previous support level here of 1302. So if we break 1300 again and we correct slightly off that, we'll call that a 1-2 pattern. We'll expect again an acceleration higher in wave 3 of 5. With the target, if we go the 4-hour chart here, we build a little trend channel. The wave 5 of 3, we should reach up that higher 1300s, up around 1370 or 1380 for wave 5 of 3, and that all going well, that'll kind of kick off next week, and we'll trace a nice simple 5-wave pattern up. But things never work out that simple, really, do they? If we are actually declining off the final top in the stock market, well, then there's nothing really to stop gold, because we might get some sort of fear trade into it. You can see that previous B wave here is up at that 1365 level again. So if we've got a break at that, I think that would be a signal for those long-term traders that would like to move in, but a kind of momentum trade. For now, we'll work on wave 5 up beginning next week. And that'll be, once we do hit that upper trend channel again, up around the 1380 level, we'd look for a correction again in a fourth wave. Okay. Excuse me, I'll take a little drink. So, crude oil. We're moving lower again. We had a nice spike lower today. We haven't taken out any significant highs. That previous A wave there at 54. The real crunch would come if we started taking out these previous lows here. So the most extreme of those would be $50. So if we broke $50 again in a nice impulsive move, well, then we'd be looking at the beginning of third wave down. And I think the alternate account was pretty much ruled out today, the one that I introduced yesterday. But for now, kind of tentatively looking at a third wave down, building off the wave C high, which actually came in over here. And we still, you still can't rule out the idea that this was this wave C was an expanding wedge. It's still very viable, especially if we move back lower in 5 waves below the previous B wave here. So that'd be the 50-50 or 50-60 level there. But for now, we'd want to see 5 waves build again and back down into the direction of the downtrend and a break of that previous B wave. So this current B wave lies at about 51.30. So let's get into the hourly chart to see where that is. See here I have that support level 51.55 on this chart. So we are selling off again. So that I think we're building a third wave here. I can see 1, 2, maybe a 3, maybe a wave 4 of 3 happening right now. I should label that while I'm at it. And I have an alternate account shown there. Okay, 1 second. Really should have put this done. I'm kind of chasing my tail all day. Okay, 1, 2, 3. Some sort of fourth wave going on right now. No, I'm not finished. Go back there. There was a guy on Irish TV a few years ago. I think he could be still on it actually, and he used to do paintings. And he would talk to the paint while he was painting, and talk to the paintbrush. I'm kind of reminding myself of him now. Okay, so 5 waves down here in a possible third of a third wave. So I'm looking to build a larger wave 1 and maybe even a break of that these previous support levels here. So 50-60 is the lower end of that alternate count, alternate wave B. You have the current wave B there at 50-55. So if this wave 1 continued and broke that level in a 5 wave pattern, well then we would be on the road for a turn into a very large wave 3 down, and can expect some layoffs in the oil market again. Okay, so next week we'll continue with this pattern lower. If this fourth wave is in play right now, we might see a little bit of consolidation on Monday. Would like to see these previous lows of wave 1 and wave 1 hold. So push down below 55 again, complete wave 3. So it could be a bit of a jolting kind of market over the next couple of days if it's a series of 4th and 5th waves that are going to play out. It might feel like it's going nowhere, but as long as we're kind of net moving negative, well then the impulse wave lower is still in play. Okay, so that's crude oil. Let's get to the S&P. Let's get the chart on screen. First of all, okay, so we've moved down off that 2800 resistance. That was a pretty heavy resistance area. The same wave count holds for the S&P as it does for the Dow, and that second alternate count also. But for now, it doesn't. All 3 point lower in the medium term at least. So we should be looking at a decline in a C wave back down to about the 2100 level again. Minimum target break of that previous A wave low, so minimum a break of 2300, but we should hit that lower trend channel line anyway, which would come in at about 2250 or something like that. Again, wave C down should be in 5 waves, and the way that we will be able to discern between the C wave and or the current wave count, which might call for another 5th wave up, and the alternate count here, so maybe a failed 5th wave or a a kind of an extreme expanded flat, wave 2. The way we'll be able to discern between those will be the reaction of the lower trend channel line here. So it's likely to be sharp and at least a reasonable retracement. But if it's in 3 waves and we fail again, so I mean we complete a C wave down and then we get a retracement in 3 waves off that low, well then that would point fairly heavily to the alternate count, and we can look lower. We can rule out a further 5th wave high, and we can look lower again. But for now, let's get into the hourly chart and kind of pull apart the decline off the high. So we had those 28.12, 28.16 levels, and we moved sharply lower off those levels. It's a nicer pattern than the Dow so far. I think we could have closed out wave 3 here. If you look at it, you have wave 1 down, wave 2 up, and then you have wave 1, 2, 1, 2, 3, 4, 5, 3, 4, and maybe a 5th wave of 3. So early next week, we would look for short consolidation, some sort of a correction or 4th wave correction, maybe a flat or something. I wouldn't like to see any break of that 27.67 level again, but for some kind of retracement higher again, maybe towards the 27.50 level, and then a breakdown again in wave 5 of 1. So here's the previous wave 3 high. So if we got a break in wave 5 of 1, if we got a break of that support of 26.78, that would be mega. And we would have a nice clear 5 wave pattern, a break of a pretty decent decent support level. Obviously, again, if I was to wish upon a star and see a break of the previous 4th wave again, but I don't think that's going to happen unless we get unless and until a 3rd wave comes in. For now, we'll just work with this 5 wave pattern off the high, and then let's see if we can create a 3 wave pattern next week. So a push lower down towards the a push lower in wave 1 and a break of 2700 probably in a nice 5 wave pattern, and then a 3 wave counter trend correction to complete an impulse wave off the high, and then we will be in a position to work into a 3rd wave. So next week could be pretty exciting actually. If we get a clear impulse wave off the high, we could be moving down into a minimum large degree C wave with a target of about 22 to 2100 maybe. Okay, let's move on. Where do we go next? We go to silver. There's the 4-hour chart in silver, if I can get it up. Discount what I just said there. 5 waves up in 1 complete. Nice 3 wave correction in wave 2, an expanded flat. Wave C of wave 2 completed 5 waves. We hit the 50% retracement level of the previous wave 1, and now we've got a nice spike higher again today. So that sets the scene for what I think could be the beginning of a 3rd wave up in silver. And here you can see that we're likely working on wave 1 right now, and maybe we're in a wave 3 of 1, and that could push higher early next week up. It might recover much of the losses over the last couple of weeks. So we could see a push back up to the 1580 level again in wave 1, especially if we get a similar size to this similar degree C wave. So if wave 1 kind of negates wave C there, we could push right back up above 1618 again. But for now, we're going to track a possible wave 1 of 3 to the upside next week. We've got off to a good start. We may label that kind of wave 1, and maybe with a 2nd wave to come in and wave 1 itself, like I said, could even push up to that previous resistance there. Silver's looking decent. We've got a nice correction in place, and if we get a good stab higher next week, I think we could pretty much call a large degree third wave in play, with a possible. Let's see if we can get a target on that third wave. So there's wave 1. We can actually select that, place that at the wave 2 low, and that gives us about, the 162 extension gives us about 1860 for wave 3, with a minimum target of 1720 or so. So that kind of target range there between wave 1 and 3 equality and wave 1 and 3 Fibonacci extension. Let's get a level in there. Maybe 1860. That'd be a pretty decent haul. And get rid of that. Next week, we'll try and catch wave 1. If we got a nice impulse wave off that wave 2 low, we could pretty much call a third wave before it starts. And again, it could be a pretty decent move higher in silver. Okay, let's get into the 10-year treasury. This has been a pain in the neck over the last while. We've made kind of zero net progress since the 3rd of January, or very early January. First trading days back in January. It looks like this is a very large B wave now, rather than a 4th wave or a 1-2 pattern. This B wave is tracing out possibly a flat, so we should see a 5-wave move off this final B of B high. You can see wave B itself has confounded me as it went on anyway. I'll go into the short-term chart and kind of pull that apart for you. But if I can get a couple of scribbles on this, it might make some sense for people. So as so often is the case with corrections, they tend not to want to come to light until towards the end of the damned correction. Okay, so we're looking at a large B wave. 3 waves down in A of B, 3 waves in B of B, and we should see 5 waves down in wave C of C. Oh, sorry, wave C of B when that comes in. So let's get into the hourly chart to kind of pull that one apart. You can see here this 3 waves down off in wave A. 3 waves up in A, then probably an expanded flat wave B, 3 down, 3 up, and then 5 waves down in C. So it's a 3-3-5 pattern in wave B of B, and then we're moving up. We have moved up in 5 waves into today's high, and we've hit the upper trend channel, and we've moved off that upper trend channel again. So it's possible that wave C of B is now complete, and that would complete wave B itself. So to complete the whole larger correction, that would be wave A up and wave B down. We'll look for one more move lower down to this lower trend channel line here, about 120, and that should be in 5 waves if it's a pretty traditional straightforward C wave. And then at that low, we'd look higher into wave C, and that wave C, let's get a larger trend channel on that. We're working with the trend channels today. You're looking up about 125 to complete wave C, and that's a pretty large degree 3-wave pattern with significant downside after that. But this final C wave might come in on the back of some sort of panic in the stock market. So much hinges on the damn stock market. We just need we need that 5 waves down. Okay, that actually does it. Actually, I think that's been a painful half hour for you. If you stayed through it, well done to you. And we'll catch up with you on Monday evening again for the nightly update. Thanks so much for being with me through the week, and we will. I hope you have a great weekend. God bless. We'll catch up with you on Monday night. Bye bye.